morning, everybody. As Mark had mentioned, my name is Peter Curli, and I'm actually an audit partner in the newly formed asset management group at KPMG. So I'm very honored today to be introducing our next keynote speaker, Mr. Peter Thiel. So Mr. Thiel is a technology entrepreneur, an investor, and a philanthropist. Mr. Thiel first gained attention for innovations in banking and startup finance. Today he is a well-known mentor of the PayPal mafia of entrepreneurs, and he is also known for his warnings of a coming technology deficit with severe economic consequences. In 1998, Mr. Thiel made e-commerce easier, faster, and more secure by co-founding PayPal, which now has more than 113 million active financial users. In 2002, Mr. Thiel sold PayPal to eBay and founded global macro fund Clarium Capital. He's also known for making the first outside investment in Facebook in 2004, where he currently serves on the board of directors. Building on his personal success as a venture capital investor, Peter co-founded and manages Founders Fund, a leading VC firm where he has invested in well-known companies such as SpaceX, LinkedIn, Yelp, Zynga, and Spotify. In 2012, he co-founded Mithril Capital Management, an international technology investment fund. Mr. Thiel recently created the 20 Under 20 Thiel Fellowship, which nurtures the tech visionaries of tomorrow. He has also just published his first book, 0 to 1, which he will be discussing in our discussion here today. Please help me in welcoming Peter Thiel. Interviewing Peter today will be Lawrence Aragon. Lawrence is the editor-in-chief of Biotech Insider, a UCG company. Lawrence also oversees PE Hub and Venture Capital Journal. Mr. Aragon has been a business journalist and editor for more than 20 years and has won many awards, including those from American Business Media, the Computer Press Association, and CMP Media. Please help me in welcoming Mr. Lawrence Aragon.
My resume just doesn't stack up with Peter's, does it? So, a little off balance. Thank you, everyone, for coming here. Obviously, we're very, very excited to have Peter with us. Thank you for joining us.
Thanks for having me.
I just want to, and we are going to, I do want this to be interactive, so if you have questions, and I see Steve Jurvetson out there, I know he's definitely going to have a question, so we'll want to jump in. So let me ask right off the bat. So the book is 0 to 1, and recently you did two things that you never did before. So you tweeted, which
0 to 1 tweets.
0 to 1, and then you did a Reddit AMA. So why is it so important to you that 0 to 1 is successful?
Well, it's, if you actually spend, the book came out of this class I taught at Stanford in 2012 on how to start companies, everything I know about business. And one of the students, Blake Masters, took these notes. They posted it on the internet. 300,000 to 400,000 people read them, and so I realized there was a tremendous interest in this question of technology and forming new businesses and startups. And I tried to distill everything that I've learned over the last 15 years into the single book. And so, when you spend a year writing a book and several years before that building up to it, it definitely makes sense to do at least one tweet and to try to promote it a little bit.
So just to help people get on board with what we're talking about here. So in talking to 0 to 1, you say copying others takes the world from 1 to n, and then adding something basically that's more familiar. And then if you do something new, you go from 0 to 1. So what company would you say exemplifies, just to help people understand this, what company exemplifies going from 0 to 1?
Well, very broadly, I differentiate between. I think one of the things people always do, in my mind, it's a big mistake, is conflating globalization and technology. And they're both somehow about the future, and they're both about progress in the 21st century. But I always draw globalization on an x-axis, and I think it represents horizontal growth, copying things that work, going from 1 to n. That's what China is doing. That's the 20-year plan China has. They do not have to invent a single new thing in China. and you can actually improve living standards tremendously for all the people who live there. It's not saying that Chinese people are uncreative, but they just don't have to be in the world in which we're living. And I always draw technology on a y-axis, and technology represents vertical or intensive growth going from 0 to 1, doing new things. And that's something that's actually very important for us in the so-called developed world, because if we're not going to face stagnation, we have to think about how do we go about developing the developed world and how do we do new things. And so the question of technology is a very critical one for people in the US, Western Europe, Japan, places like that. Now I think that you sort of, what does it mean to do something new? And sometimes you sort of know it when you see it. But I would say all the great technology companies have involved these kinds of breakthroughs, and certainly Apple is probably the paradigmatic one, both with being the first to really break through on the home computer in the late 70s, early 80s, the first one to get a smartphone that actually worked. And so you can have companies that have done things like this before, but the first one that actually works, I think, is often what really counts. And the 0 to 1 idea, going from nothing to something, the sort of quantum leap, it's against the sort of incrementalism that I think we're so used to. And the reason that I'm attracted to 0 to 1 companies that make these very big steps, is because I think one of the other ideas that I'm very sort of the idea fix I have, the sort of single obsession I have, is as a business strategy, you always want monopoly. You don't want to compete. The opening sentence of Anna Karenina is all happy families are alike, all unhappy families are unhappy in their own special way. I think the opposite is true of business. I think all happy companies are different because they're doing something radically unique. All unhappy companies are alike because they fail to escape the essential sameness that is competition. If you want to compete like crazy, if you want to be in a Darwinian world of nature bared red in tooth and claw, you should just open a restaurant in San Francisco. You will never make any money. But that's because capitalism and competition are fundamentally antonyms. The way the Wall Street Journal rewrote, the chapter was entitled "All Happy Companies Are Different." When newspapers get to excerpt things, they get to rewrite the headlines, and they rewrote it from "All Happy Companies Are Different" to "Competition is for Losers." And I think that's psychologically the mindset that we should always try to have, because we've been brainwashed into thinking that the losers are the people who don't compete intensely enough, whereas I would submit to you the losers are the people who do the exact same things as everybody else and who believe that it's about competing more intensely for scraps. It's like, it's sort of like the way Henry Kissinger described his fellow professors at Harvard, where the battles were so ferocious because the stakes were so small. It's a definition of insanity in a way.
So let's dig into this a little bit more. So, and one of the questions I had was, what companies do most of us think of as being, one-to-N companies, but you would argue are 0 to 1? And some of the ones that came to mind for me were Google, because search was done before, and Facebook because social networks were done before. So
yes, certainly there had been search companies. I would say Google was the first one to have a computerized search algorithm with its PageRank algorithms. That was a fundamental shift, which enabled it to do it in a way that was vastly better than anybody else. And even Yahoo was forced to adopt Google, even though they really didn't want to. I think Facebook was the first one to get real identity. So you had all these different social networking companies for a long time, but they hadn't really cracked the real identity thing. One of my good friends from Stanford, Reid Hoffman, who started LinkedIn, in the late 90s, he'd started a social networking company called SocialNet in 1997. So they already had the name in the company in 1997, 7 years before Facebook. And the theory was that on the internet, you'd have these avatars, and maybe you would be a cat and I'd be a dog, and we'd figure out how we interact in this virtual reality. And that was sort of what people thought was supposed to happen, and what actually really mattered was getting real identity, which I think Facebook was the one that really cracked that code. So it can often be somewhat subtle things that are nevertheless really important and central.
Now, another question is, and I think Steve actually asked this, it's like, can a company go from 0 to 1 more than once? And I think of a company like Apple, for instance. How would you answer that?
Well, I think the founders of these companies are very important. So I think that the companies that are able to still innovate, in my mind, in a dramatic way, are the companies that are founder-led. And so it was very critical in the case of Apple that Jobs came back in 1997, and I mean, and radically shifted the company from a home computer to a consumer electronics company. If you sort of get in the kinds of politicians who masquerade as CEOs that you get at most public companies, and that the sort of supine people on these boards normally feel comfortable appointing, you will never get that sort of innovation. And that's why the truly innovative companies are ones that are still founder-led. And I think that so I think that's true. So I'm a big fan of Facebook. Obviously, I'm a little bit biased. I'm on the board there. I think Google is founder-led. I think Amazon's founder-led. I think the ones that are not have a tremendous problem. Sometimes it's not necessary to innovate. I think there are a lot of so-called technology companies which are fundamentally bets against technology. And if you went down the NASDAQ 100, my claim is that most of the investments are bets against technology. Microsoft, you're betting there will never be Linux, there will never be a different operating system. IBM, we're going to have the same kludgy software from the 70s and 80s forever. Oracle is a bet against cloud computing. On and on, HP, et cetera, et cetera. And often these bets actually work pretty well. You're effectively short gamma, you're short volatility. You're assuming there will be no disruption, nothing will change, there will be no innovation. And because we're in a world where innovation is actually more limited than people think, these have often been very good bets. But I think you shouldn't fool yourself and pretend that these are technology companies. General Motors was a tech company in the 1920s. It was still sort of a tech company in the 1950s. By the 1980s, an investment in GM was a bet against Japanese and German car makers, in the same way in which Microsoft was a tech company in the 80s, maybe still in the 90s. Today, an investment in Microsoft is a nihilistic bet against technological innovation.
With Steve Jobs gone, do you think that Apple is a tech company anymore, or do you think that it's something else, a consumer electronics giant?
I don't want to sort of take any pot shots at Tim Cook, because I think he has almost impossibly large shoes to fill. But yes, I think Apple is fundamentally at this point a bet against innovation in smartphones, and it will work as an investment if the smartphone form is if we're sort of close to a final form, if it's if it's actually a brand play, and in some ways it's that was the wrong view when the Apple board hired Scully in 1985, where they thought home computers were finished and it was just like marketing Coke or Pepsi. But maybe it's possible that that's actually the case with smartphones, that there isn't that much more you can do with them, and that therefore it is actually like marketing Coke or Pepsi, and it will just generate enormous profit streams for many years to come. I mean, Coke and Pepsi are not tech companies, but they've been good investments for a long time.
Now, what about Google? At one point, a few years ago, you pointed out to Eric Schmidt that Google was no longer a tech company because it was sitting on something like about $50 billion in cash, and now it's sitting on something like $60 billion in cash. Have you changed your perspective on that?
Well, I think Google is still trying a lot of things, but it is always, it's striking that even a company like Google, the branding is all around the technology, and yet the odd thing is that they're building up more and more cash. So there is some sense in which even a founder-led company in Google that wants to do a lot of radical new things, finds it hard to find ways to deploy all their capital to do this. And the reason this was such a, Schmidt had no idea what to say when I made this argument, because he was used to always getting attacked by investors from the other angle, which is you're spending too much money on flaky things. We want you to stop spending money on all this flaky stuff. And I was saying, you know, it's Bernanke, now Yellen. We have interest rates at 0%. They're minus 2% real interest rates. They're begging you to do something, anything with this money. And you're telling me you can't even get an ROI of minus 2% on your money. And that was that's pretty much the reality. And so I think a lot of these tech companies end up going through this cycle where you end up building up enormous amounts of cash because you are out of ideas, at least relative to the scale of your company, but you're in denial about this because the brand is still that you're a tech company. And so as soon as you start issuing dividends, that is a complete admission of failure. As soon as you start buying back your shares, complete admission of failure.
Failure is being a tech company.
As a tech company. I mean, it can still be a good business, but it's an admission that you're no longer a tech company. And so there's often a long lag between when people perhaps should be honest and admit that they're no longer tech companies and when they actually start doing it. And so there is probably an element of Google where they're still trying really hard, and there's also an element where you know, if you're investing in Google, you're probably hoping that at some point they will cave and they will admit they're no longer a tech company, and they'll buy the shares you bought at a higher price back from the company buying back its own shares.
How long does, I mean, they've got a lot of money. I would imagine that Larry's under a lot of pressure to do something, and how long before they have to say, okay, we've got to pay the dividend?
It could take a decade. I don't know. It could take a long time.
You don't think the shareholders will, if that pile
I mean,
keeps going?
it's set up in a way where the shareholders, you know, you have different share classes. So I think it could be a long time.
I do want to open it up to questions. I mean, I've got plenty. It looks like we've got one from the gentleman back here. So the question is, how do you structure education so that it goes from 0 to 1?
You know, I don't have a. I've been a big critic of our education system because I think it leads to incredibly sheep-like conformism, and I think it probably is especially bad for many of our most talented people who all end up being tracked to the same short list of Ivy League schools where they all learn, you know, the exact same things and go into the same short list of careers. And so there's something incredibly sterile about it, and so I think you want people to do very different kinds of things. I'm a fan of some talented people stopping out of school and becoming entrepreneurs. It's not a claim that everybody should do this or that nobody should go to college, but I think the sort of one-size-fits-all approach is serving us very, very poorly. You know, the analogy that I've used for, you know, thinking about where we are with education, with this education bubble, you know, $1 trillion of student debt, it keeps going up much faster than inflation every year. You have spiraling costs, and people can't imagine doing anything else besides continuing with this somewhat screwed up system. And I think it's sort of like the Catholic Church 500 years ago, where you have it's a universal system. Universities are sort of a successor to the universal church. You have some differences between, you know, the Yale and the Harvard political science faculties, just as you had some small differences between the Dominicans and the Franciscans if we were in 1514, 500 years ago. You have a professorial class that's like a priestly class that's extorting more and more money. The indulgences are costing more and more. You know, you're told there's no alternative. You go to Yale or you go to jail. You know, you will be saved if you get a diploma from college. Otherwise, you know, you will go to hell. That's sort of what people are told. And so And so, the message I have is like that of the 16th century reformers, where I think that, and it's a disturbing message, which is that you have to figure out how to save yourself. There's no institution, there's no system for doing that.
I'll leave you this lady right here. Yeah.
I'm Joan Tran from Heather Global. Peter, could you talk about some of the investments you've made that haven't worked out and why they didn't?
So the question is investments that haven't worked out and why they didn't work out.
Well, I'm not sure there's, there's sort of all sorts of different reasons things don't work. On the technology startup side, certainly there's always this failure to escape the sameness that is competition. We're often very focused on exotic technologies because we think that's a key differentiator. So one common thing is you just don't get the technology to work. It doesn't actually work as advertised. So that's sort of a common failure mode for us. I think a common failure mode for many other VCs tends to be to invest in things that are too similar to Me Too. And so you don't want to be investing in the 4th online pet food company, the 10th thin film solar company, the 1,000th restaurant in San Francisco. So we've sometimes run into that problem. More often it's that we think it can differentiate, but it can't. In the sort of the proximate cause for failure is normally not external, it's normally internal. It's that the people just don't get along, and so I always try to ask this prehistory question when I meet with founders. How did you meet? How long have you been working together? Bad answer. We met a week ago at a networking event. We both want to be entrepreneurs and start a company. It doesn't really matter what it does. Good answer is something like, we've been working for years, and we've been thinking about, like, I'm on the business side, the other person's on the tech side, and there's sort of a naturalness to the history, which gives you some confidence that you'll be able to go through all the ups and downs that will come.
This gentlewoman over here in the green dress.
Peter, can you tell us a little bit about your thoughts on data compression and the future of cloud computing, and where you see that going in 5, 10, 15 years?
So thoughts on data compression, cloud computing, and where it goes in 15 years.
I'm skeptical of almost everything that can be described thematically, because I think everything that's thematic is overhyped and somehow insufficiently differentiated. And so I find myself skeptical of education software, of healthcare IT software, of mobile computing, of SaaS, and certainly of cloud and big data and all the things around that. I think these are buzzwords that sort of pull a whole bunch of different things into it. And so if you have a company that says we're a cloud computing company, that somehow is insufficiently differentiated. There may be something that happens in all these areas, and I think it's important to think through them, but it's always a very specific, extremely differentiated story. And I think the kinds of things that are underestimated are the companies that actually don't fit into some straightforward narrative. And this is, again, is another way to get, the one to N is where you have many companies of a type. And that's where it's easy to tell a narrative, even though they're undifferentiated and they're competitive and they don't make money. And the one-of-a-kind company is often one where it's much harder to tell a narrative because it's sort of weird and fresh and strange, and we don't quite know what to make of it. We're big investors in Airbnb, for example, which people have tried to sort of put into this sharing economy frame. I don't think that necessarily makes that much sense. It's just sort of a unique, one-of-a-kind company, and it doesn't quite fit into any of our existing narratives. So I always like ones that don't fit narratives, and I'm skeptical of ones that fit all these standard narratives that we talk about.
I'm going to take one. Let me just do a follow-up real quick. So along the narrative line, so it seems to me that the VCs can basically blow it, and this was clearly a case with Facebook, where they lumped Facebook in with, it's another social networking company. And everyone said it was overvalued. Yeah, yeah. What did you see there? You were the first outside investor. What did you see that told you that this was not another social networking company?
Well, there was, I know there's sort of many different things one could say. I've been an investor in Friendster, which was the one people compared to, and the point of failure at Friendster had been super idiosyncratic. I mean, it was a really, so people thought that these social networks came and went. They were all like fashions. Friendster had came and gone, and so this would happen with all the other ones. As an investor in it, I realized it was sort of a rather dysfunctional place. The office was decorated with large blown-up pictures of the CEO, sort of like North Korea, and there were all these really elementary things that they could have fixed. I'm not sure it would have been enough, but the failure was actually very idiosyncratic. And so, having been an insider at Friendster, made me strangely more bullish on this as a space, because I realized the failure points had been super idiosyncratic. I think VCs often have a blind spot for things. They overvalue things they use. They undervalue things they don't use. I think Uber's overvalued because investors like driving in town cars. I think a college social networking site is somewhat undervalued because people don't understand, the investor class as a group is not in college, and so they don't fully understand how intense that experience was. So I think there were some systematic blind spots around Facebook.
We've got about 5 minutes left. This gentleman here.
As part of your venture fund with Founders Fund, you guys have made a few investments in Bitcoin-related technology companies, and I'd love to get your take on Bitcoin, the future of Bitcoin, specifically how you see kind of the recent impact on price and kind of stagnant volume influencing how that plays out.
So the question is about Bitcoin, the future of Bitcoin. And obviously, you've bet on it.
Yeah, we've made it's been a very, very small amount in this area. I think, I think that PayPal, we had these T-shirts at PayPal that said we were going to be the new world currency. We're going to create a new currency for the world. We failed to do that. We did succeed in creating a new payment system. And I think of Bitcoin as sort of the opposite. It has actually succeeded in creating a new currency, at least on the level of speculation, which is a very impressive achievement. But it has failed to actually create much of a functioning payment system. And so it's very hard to use the currency to make payments. I mean, maybe you'll use it for super illegal things like buying heroin or something like that, where you're willing to go through lots of hoops. But I think the payment system still doesn't quite work, and it's not clear it can ever work that easily given some of the crypto protocols that are used. And so I think the critical thing for us to become more bullish on the Bitcoin ecosystem would actually be for the payment system to work better and to see a larger volume of legitimate payments, legitimate transactions.
More questions? Go ahead.
You reported recently an agreement with Biotech on biotechnology and some of the developments there. And I was curious about, given the history of the returns on the biotech investment, or if they were venture-backed, not being as strong as I've seen institutional investors.
So the question is about Peter not being bullish on biotech, and does he see an opportunity there, and how can institutional investors take advantage of it?
Well, I'm not sure I'm systematically bullish on it. It's an area, on the Founders Fund, Mithril, on our venture side, probably 2/3 of our investing is IT related. We have experimented and we've invested in some areas outside that, so we are probably a bit more diversified outside of IT than most Silicon Valley venture firms, and we have looked at a few different biotech things. It does feel extremely bombed out as a space. On the other hand, it's there are a lot of very specific challenges, and you always have these very tricky regulatory questions, which you're always at risk of underestimating coming from the relatively unregulated IT world. I would say the thing that I've come to think is very important for companies where there's a big science component is actually the business side. And so, engineers tend to be pretty bad at business. Scientists are catastrophic. And they have all sorts of fantastical delusions about how the world works. And they sort of think that if they come up with something great, the world will rush to their door and buy it. And so I think the part that I think you can do a consumer internet company and not be that great at business, and you can sort of gradually learn over years and figure it out. And so you can be an engineer who starts or product guy, starts a consumer internet company, not know much about business, and eventually it'll get enough momentum that you'll be able to figure out ways to make money and turn it into a valuable business. Something that's more hardcore science-like, I think this is really, really critical. And so I'll give sort of one example. And so the scientist delusion is the business part doesn't matter because it sells itself. I think the standard modality for a biotech startup is that you come up with some new kind of drug, let's say there's one big pharma company you can reasonably partner with. And let's say that the drug's worth $1 billion to the pharma company, and let's say that it might make sense for you to sell it for anything north of 10 million. So how much does it get sold for? 10 million or $1 billion? What's the price? And the answer, whenever you have a bilateral monopoly negotiation where you have one buyer and one seller, is that it's as far from a market as possible. And the most critical thing is how effectively it gets negotiated. And so when you have the scientists running these companies, it's always $10 million, and you always lose your money.
We're just about out of time. Other questions? This gentleman waving his clipboard.
Thanks, Erwin Loud, Muller and Monroe. I'd be interested in what you see as the essential elements in a successful 0 to 1 company. This is essential elements of the corporate culture of 0 to 1 companies.
Well, I'm not a big fan of corporate culture as something independent of what the company does. So if, in fact, if people talk too much about the Aeron chairs or the bean bags or various weird perks and benefits, that's probably symptomatic of a somewhat bad culture. So I think the culture of a good company is actually not separate from the mission of the company. And so it's always having some very unique mission that's very differentiated from everybody else. We're investors in SpaceX. When Elon, my colleague from back PayPal days, started SpaceX, it was defined by a mission to go to Mars. That's how they recruited all these rocket scientists to join them. And this is the only company in the world where you're going to go to Mars, and that's what the culture got built around. So I think it's always substance, always something unique and substantive, and so I'm always sort of long substance, short process.
Sadly, we could be talking for a couple hours here, and it would be awesome. Let me ask you one final question, and this is a serious question. I mean, you're a billionaire. You've had a lot of achievements. What is your biggest ambition that you haven't achieved yet, that basically before you die, this is something that you want to do? And maybe nobody knows either.
Well, I like what I'm doing. I want to just keep doing this for a long time. I certainly the area that I'm very passionate about is trying to do something to really get some progress on the anti-aging, on the longevity front. I think it is a strangely underexplored area. There are 100,000 people who die every day on this planet, mostly from things related to aging in one way or another, and it's a massively understudied, underinvested phenomenon. And the way we, psychologically, the way we deal with aging is through some combination of acceptance and denial. Acceptance, it's going to happen, there's nothing we can do about it. Denial, it's not going to happen to me. And sort of when you combine extreme optimism and extreme pessimism, they always get you to the same point, which is there's no point in doing anything, or there's no need to do anything, and so it nets out to not doing anything. And so instead of acceptance or denial, I'd like us to be fighting a little bit more.
So let me just plug Peter's book real quick. So I've gotten through half of it, I'm not going to lie. It's really good because I don't necessarily agree with everything, but it challenges the way that you think about the world. And I just wanted to point out that right now it's #1 on Amazon's economic policy category. So it's outselling Timothy Geithner's book, Stress Test, and Thomas Piketty's book, which you probably disagree with, The Capital in the 21st Century. So definitely pick up the book. And please join me in thanking Peter for sharing his time with us today. Thank you so much, Peter.
Thanks for having me. Thanks a lot.